Hey, what's up, everyone, and welcome back for Friday, March 7th. So, nice green day on the market. Hope you all had a nice day. The first half of the day was pretty red, but it ended positively. So, the S&P 500 was up 0.55, Dow Jones 0.52, NASDAQ Composite 0.7, and then the New York Stock Exchange Composite 0.3. So, the latter half of the day was a great time for technology stocks, at least for this point in time. Over the last 2 weeks, it hasn't been a great time to be an investor, unless you're short the market. But hey, we'll take it. Green day, and it's a Friday, so I hope you all had a great day. Hope you're all doing well and positioned to have a nice weekend. So, taking a look here, the top strategy for the week came in with Trainer's Measure, anywhere from about 5 to 12 stocks. So again, we talked about Trainer's Measure a few times this week. It's just a good measure that helps to identify stocks that perform well during times of volatility. So really no surprise with the market kind of all over the place that, where all the money is moving to are these stocks that have measurements that do well or indicate that they do well during times of market volatility. Taking a look at the highest volume, you can see BitOrigin for today, then Sun Nation Energy, NVIDIA, Ford, Icon Energy Corp, Palantir was in the positive this afternoon. Walgreens had a lot of volume today. Biggest gains was that Sun Nation Energy and BitOrigin. As well, Wheeler Real Estate Investment Trust saw a large gain today. And then BioXcel Therapeutics, that was up here earlier this week. I believe it was on the losses yesterday, but it's back in the positive today. And then taking a look over here at the losses, companies like Big Bear AI, Intuitive Machines, and AGM Group Holdings, which had a large gain yesterday. So let's go over to our portfolio and take a look at that's performance. So overall for the day, it was a 1.27% gain versus the S&P 500 at 0.55. That's a pretty good day. That's really what I was looking for on Wednesday, was that type of gain. And that was a positive return across the board on all of the stocks, with the exception of Tesla. Tesla almost ended in the green, but still came in a little bit below their close yesterday. So you can see the trend here. We did make a little bit back on the S&P 500 today. And then overall, we're sitting at a 4.66% loss for the last week and a half, whereas the S&P 500 is at a 4.04% loss. So doing a little bit worse than the market, but overall, fairly satisfied with the performance. Obviously, I would love to be in the positive, but ultimately the point of a lot of this is to, index your portfolio so that way your portfolio is producing, an indexed return that mirrors what the market is doing. And you can do that by optimizing your portfolio and by maintaining an optimal portfolio over time, which is part of this experiment and part of why I'm doing this series is to showcase this. But obviously I'd like it to be a little bit higher. However, I'll take the performance as is, because as we were talking about earlier this week, I wanted to take a look at a few alternative stocks today. Well, I spent a little bit of time doing some research today, and I think that is actually going to take me a little bit longer to put together. So that might be something that I either do tomorrow, Saturday during my weekly recap, or it might be something that we break across 2 or 3 episodes next week, and then we end the week with rebalancing our portfolio. Now that I say that, that sounds like a pretty good idea. So one thing that I did want to show you today while I have you here is the feature here in this platform where you can build a watch list. Now that's not unique. You can build a watch list on anybody's website. But I just wanted to take a moment to show you some of the stocks that I have on my watch list. Now, this is not saying that any of these are good investments. They're just stocks that over the last year or so have piqued my interest, so they've ended up on my watch list. Now, I want to go through these. I'm going to make maybe a couple comments here or there, not on every single one of them because there's like 50 or 60 of them. You'd get bored listening to all that. But I just kind of want to go through these because as you get access to more than 7,000 stocks that are on the New York Stock Exchange, the NASDAQ, there's a lot to pick from. And it's kind of fun. At first, you're going to see a lot of names that maybe you didn't realize they were publicly traded companies, or maybe some brands out there that you've always really liked and didn't realize that you could purchase their stock. So I always like to have a watch list where I'm adding different companies to it. Doesn't necessarily mean that I want to invest in them or that they are a good investment. They're just a company that I want to keep an eye on that's piqued my interest. and I want to kind of monitor them over time, see how they're doing, and potentially include them in my portfolio. So what we'll do next week is we'll probably look at 3 or 4 of these in a little bit more depth, and then we'll take a look at a couple different versions of the portfolio, including these stocks. But I'm not sure which ones I want to choose yet, so let's take a look to see what's in here. So you got ASML Holdings. They're an industrial machinery and components company. Caterpillar, they're a large construction ag equipment organization, manufacturer. You got Crocs, the shoe company. Cummins, Diamondback Energy, DigitalOcean Holdings. That's an organization that I've used their software for probably the better part of the last 12 to 15 years. They've always been very reliable for me. Discover Financial Services, so your Discover card. Dollar Tree, sometimes they tend to do a little bit well when everybody's, wallets get pinched a little bit. Sometimes those investments that represent a little bit more value, like a Dollar Tree or a Walmart, you tend to see sometimes some shift in spending that tends to go towards those more discount retailers. But, so I always just kind of keep an eye on them. That's not always true because Dollar General and Dollar Tree have kind of been all over the place a little bit. You can see here negative alpha, negative sharp, negative trainer. So not necessarily something that I would probably consider for my portfolio, but I always keep an eye on those types of stocks whenever we're experiencing any type of downturn in the economy. Moving on, you got Electronic Arts. I love video games. They're a great manufacturer of video games. You got GE Aerospace. Of course, they're just an industrial giant. General Mills, GoDaddy, Granite Ridge Resources, Hilton, History Yale, iHeartMedia, Intercontinental Exchange Group. So they own like the NASDAQ, they own the New York Stock Exchange. Intuit, they're a great software company. Iron Mountain, you got Philips, like the TV and home appliances company, but now they're mostly focused on healthcare technologies. You got Live Nation Entertainment, Lululemon Athletica, MI Homes, Madison Square Garden Entertainment Corp, McCormick and Company. I love the idea of owning spices. They're not doing too well at the moment in terms of their performance metrics here, but I just really like, the original company was the East India Trading Company, and they traded spices. And no matter what happens in the world, and no matter how the economy is, I feel like people got to eat, and they don't want that food to taste bland. So I've always liked the idea of investing in a spice company. And actually, I think it was 2 years ago, for about a year, I had them in my portfolio. I don't currently, but of course, I always like to keep an eye on them. MGM Resorts, if you like to gamble, they're a great stock for that. Or they have a lot of wonderful resorts that you can go to. MicroStrategy Incorporated is a good technology stock right now. They're the one that's helping to deploy some of these server farms for Elon Musk. MNSO Group Holdings, we've talked about them. Mr. Car Wash, car washes can be a great business. My wife and I have been rewatching Breaking Bad. It's actually the first time she's watching it. So lately I've been looking into car washes for whatever reason. Nothing nefarious, just out of fun and curiosity. Mohawk Industries, Oracle Corporation, Progressive, that's the insurance company. Public Storage, Republic Services, I talked about trash the other day. Rocket Companies, big fan of Dan Gilbert. Simon Property Group, Sony Group Corporation, Synopsys, Taylor Morrison Home Group. There's a shortage of homes in this country right now, and I think some of the home suppliers, depending on where they're primarily located, are positioned to do really well. Now, that's not to say that there aren't other markets that are actually positioned more for a downturn and have too much inventory, but in general, right now, we need homes. So that's partly why I have them and MI Homes on my watch list. Texas Instruments, graphing calculators, 30, 40 years later, whatever it is for you, they still cost an exorbitant amount of money, but students still need them. And really, that's not what their main core technology is. They make and manufacture semiconductors and microchips. But for whatever reason, I've always thought of them and think positively because they help me get through calculus. And I always like to watch what their company is doing. Then you got Thor Industries. So they're in the home building sector, but their primary product is RVs and mobile homes. You got TJX companies. I talked about them the other day. Toll Brothers, Turtle Beach Corporation, they make headsets for gamers. They exploded when a couple years ago when COVID happened, not the company themselves. Their stock price, it's kind of come back down to normalcy at this point, but they've always been one that I've been interested in. Under Armour, course, I think they're positioned to do really well. Their agreements with Steph Curry brand and how they're kind of going about developing that, I think it's really smart on their part, and I really like their position, especially especially against some of the more established players that have been out there for a number of years. And if you're ever looking for a cheap stock, Under Armour is only $6.44. It's certainly worth a consideration. Although if you look at the 52-week low and high, it's trending towards its low. And I don't know why offhand, but something to consider, and certainly look at the news. VF Corporation, Valmont Industries, they're a metal fabricator, and then Verify Me, VeriSign, so companies that help to verify and check identities. Wabash National Corporation, Walmart, Waste Management, Whirlpool Corporation, Williams-Sonoma, and Winnebago Industries. So I think the number was at the top there. There was 55 of them. So, and honestly, this list for me could easily be close to 100. Now, I know a lot of people that are out there that talk about investing on the internet that I interact with. Sometimes I get a lot of fun out of talking to people where they have 40 or 50 or more stocks in the portfolio, which is a very strange concept for me. I tend to base things on data and math, and I have a hard time making decisions unless that's what the data says. So a lot of times I try to shy away from having a lot of stocks in my portfolio, but I'm always very curious when people have a lot and how they ended up with them. A lot of times it's just, I like this company, so I bought them, and I like this company, so I bought them. And certainly I could see how that could happen because, if I had a little bit extra here and there and, one day was interested in Crocs and the next was interested in Caterpillar, all of a sudden I could see how I would end up with 50 stocks. But again, going back to the principles here of what I'm coaching, we've got these letter grades to help you kind of do a comparative analysis for how this asset is performing in terms of that strategy. For the one on the screen, it's the Sharpe measure. So that just gives you a quick representation of how this asset is performing against its peers. And then when you put it in the portfolio, it gives you that second letter grade to allow you to understand how much risk in the portfolio is being attributed to those assets. So that comes from a covariance matrix, but then that way what you can understand is where is the risk coming from, and is this a decent asset to begin with. And then if you look at all of our testing, it really shows you even the trends that we showed at the beginning of the video today, that if you have about 5 to 12 stocks, that tends to perform the best. Because if you think about all of the stocks together as your asset, by the time you get to 50 or 60 or more, now what you've really done is you've built kind of a messy index fund, because it's really not necessarily going to act like the index, but you have so many stocks that you've invested in, and each one is such a small portion of your portfolio that even if one of them you hit on and it's got a 10x gain, your portfolio is going to see maybe a 1 or 2% gain that day. And it's just because you're so diversified into all those different areas. But, look at the bigwigs, look at the Warren Buffetts of the world. He doesn't have, I think he has like 11 or 12 stocks in his portfolio right now. He doesn't have 50. He doesn't have 60. He concentrates on a few. And especially longer term, if you're really interested in your investments and you want to do more research, think about that as well. Because if you have 5 or 10 or 15 stocks in your portfolio, you really should be reading their annual reports. You should be reading their earnings releases. And if you have 30, 40, 50 stocks or more, it can be very difficult to keep up with just even the news and information about the stocks that are in your portfolio, let alone stay on top of deciding, okay, I want to hold on to this one long term, or I want to sell that one and take my gains or take my loss at this point in time. So just something as well to consider as you go about building your own portfolios is don't feel like you got to include a lot in order to get a good return. What our testing shows is really if you 5 to 8 in your portfolio tends to be optimal. So really, don't do like me a week and a half ago where I just threw some assets in this portfolio. Do your research and really hone in on maybe 5 to 10 assets that you really do want to include, and then leverage these tools, leverage the optimizer, leverage risk aversion, and then you have a securitized portfolio that is going to perform a lot like an index. So stay tuned. Take a look at some of our other videos if you haven't already. We also do some Saturday updates, so I'll upload that about midday tomorrow. We'll talk about some concepts here behind the scenes, and then next week we'll get a little bit more into the rebalancing aspects and doing some comparisons of different portfolios. So appreciate you being here. Have a great night. God bless. Take care.